Have you ever felt a subtle shift in the air, a quiet change that you can't quite put your finger on, but you know something big is happening? Well, that's exactly what's going on in the world of global economics. Countries around the globe are quietly, cautiously, taking a step back from the U.S. market and walking away. It's not a dramatic breakup, but more like a slow, deliberate distancing. And the big question is, why? The answer, in a word, is unpredictability. Imagine trying to build a house on ground that keeps shifting. One day the foundation is solid. The next, it's shaking. That's what it feels like for other nations trying to do business with the United States right now. Trade policies have become a roller coaster of surprises. One day, we're hit with unexpected tariffs on goods we've been trading for years. The next, there's a handshake deal that seems to smooth everything over, only for the terms to change again without warning. This kind of flip-flopping makes long-term planning nearly impossible, and in the world of international trade, stability is everything. Countries and corporations invest billions of dollars based on established rules, and when those rules are constantly in flux, they get nervous. And rightly so. Let's look at the key moments that have led to this global hesitation. A major turning point was the U.S. withdrawal from significant trade agreements, most notably the Trans-Pacific Partnership, or TPP. This was a deal designed to link the economies of 12 countries around the Pacific Rim. When the U.S. pulled out, it didn't just leave a void, it sent a clear signal that it was stepping back from its traditional role as a leader in global trade architecture. But the world didn't stop. The remaining countries moved forward, creating their own version of the pact. They built stronger alliances without us, proving that the global economy could and would reorganize itself. Then there's the constant threat of sudden tariffs. These aren't just negotiating tactics, they're disruptive shocks to the system. For a business in another country that has spent years, or even decades, building a supply chain that runs through the United States, a surprise tariff can be devastating. It makes products more expensive overnight, ruins profit margins, and forces companies to scramble for alternatives. After this happens a few times, global partners start to question the reliability of the U.S. as a long-term market. The trust begins to erode. Some analysts even suggest that this unpredictability is a deliberate strategy, a way to keep trade partners off balance to gain an upper hand in negotiations. By keeping the terms vague and the future uncertain, the idea is to maintain leverage. But this tactic appears to be backfiring. Instead of forcing countries to comply, it's encouraging them to look elsewhere for more reliable partners. They're tired of the guessing games and are actively seeking stability. So, where are they turning? They're turning to each other. We're witnessing a powerful surge in regional trade. Countries in Asia, Africa, and Latin America are strengthening their economic ties, creating bustling trade networks that increasingly bypass the United States. They're signing new agreements, reducing tariffs among themselves, and building a more interconnected, multipolar global economy. This isn't just about avoiding U.S. unpredictability. It's also about recognizing the incredible growth and potential within their own regions. Adding to this, the U.S. economy itself is showing signs of slowing down. For decades, America was the undisputed engine of global growth. Now, other markets are looking more vibrant and attractive. As growth in the U.S. cools, the appeal of investing and trading with faster-growing economies naturally increases. It's a simple matter of following the opportunity. A significant trigger point came in April of 2025 when a major new round of tariffs was announced. For many nations, this was the final straw. It accelerated the search for alternative, more stable trade partners, cementing the trend of de-risking from the U.S. market. Now, you might be thinking, this all sounds like high-level international politics. What does it have to do with me? The truth is, these global shifts have a very real, very direct impact on our daily lives, and the ripples are already reaching our kitchen tables. Let's start with the most immediate effect: rising prices. When trade becomes more difficult and expensive, the cost of imported goods goes up. That means everything from the avocados in your grocery store to the new television or washing machine you've been saving for could get more expensive. This is especially true in smaller towns and rural areas where supply chains are already stretched thin. Any disruption at the international level gets magnified by the time it reaches local shelves. Our own producers are feeling the squeeze, too. American farmers and manufacturers rely on access to global markets to sell their products. When other countries pivot away from the U.S., our farmers lose key buyers for their crops, and our factories lose orders for their goods. This hits rural communities particularly hard, as agriculture and manufacturing are often the bedrock of their local economies. It's a direct blow to American jobs and livelihoods. Even home repairs are getting more complicated and pricier. That essential part for your furnace or the specific type of lumber you need for a project might now be caught up in a tangled web of tariffs and shipping delays. Sourcing materials becomes a headache, and the extra time and cost are passed directly on to you, the homeowner. Beyond our wallets, there's a bigger, more fundamental shift happening: the changing role of the U.S. dollar. For generations, the dollar has been the world's primary reserve currency. This has given the U.S. enormous economic advantages. But as countries trade more with each other in their own currencies, the dollar's dominance begins to fade. A weaker dollar might sound abstract, but it means that our money doesn't go as far on the world stage. Imports become more expensive, and even that dream vacation abroad could cost you significantly more. And there's a risk that hits close to home for anyone who owns property or hopes to one day. If global investors get spooked by the instability and start pulling their money out of the U.S. market, it could have a serious effect on our financial system. A flight of capital could lead to higher interest rates to attract it back. For homeowners, that could mean a spike in mortgage rates, making it tougher to afford a home and harder for new buyers to build that all-important equity. The bottom line is this: the trust that once formed the foundation of America's relationship with the global economy is fading. The perception of the U.S. has shifted from a stable leader to an unpredictable partner. This isn't just a political headline. It's a powerful economic force that is reshaping our world. The effects are already being felt in our communities, in our businesses, and in our homes. And it's a stark reminder that in a deeply interconnected world, no country is an island. The choices we make have consequences that ripple far and wide, eventually landing right back at our own front door. The circumstances we find ourselves in are not accidental. They are the direct consequence of one individual and the movement that follows him, Donald Trump and the MAGA cult. Thanks to his policies, our farmers today are staring down disaster, something we never saw under the Biden administration. Grocery prices, and the cost of nearly everything else, continue to climb. Healthcare has become unaffordable for many families, while mortgage and rent payments stretch budgets to the breaking point. Across the country, financial stress is rising, and people are struggling just to keep up with the basics of everyday life. Let's pray for change. We need to turn this ship around, and fast.